Hello and welcome to the show, and wishing all our viewers a very, very happy new year. May you have a great 2019. Sonia, happy new year.
Happy New Year, Nisha. And once again, like yesterday, today it's just the two of us working and most people out there in holiday mood. But nevertheless, I mean, hope you have a great 2019. And, you know, it looks like even from a market standpoint, a lot of people are quite bullish this year.
Oh yes, second half is what they are bullish about, and in fact a lot of people are talking about the uncertainty before the elections. Yeah. But what we can crib about today while we are working is that there is a lot of sluggishness in the market, low volumes, and therefore you can see markets pretty much at the low point. The key indices are pretty much at the low point at lunch hour. So the sluggishness of the first day of the year, partying hard last night, and the lunch hour, it's all a concoction causing so much of really sluggishness and slowness that we are seeing. But one good thing is that mid caps are outperforming the key indices, and that's the reason why the market breadth is looking a little stronger.
It's only 10,000 crores of volumes, right? I mean, it's lunchtime and generally we get 10,000 crores in the first 1.5 hours of trade. So, well, guys, no one's at work today, clearly. But for now, at least, you know, even FIs are not there in the market. So the FI numbers will also be hardly anything today. Let's see, the real trend emerges generally from the 5th of January. So the first couple of days just fall by the wayside. And from the 5th, we get a real trend or real direction in which way the markets are headed. But a couple of PSU banks are looking good this afternoon. A lot of capital has come in for many of them. So, you know, the bigger ones like Bank of Baroda, Canara Bank, etc. are all trading in the green at the high point right now. But Wall Street posted its worst year in a decade. The three big talking points of 2018 which worried investors were the Fed's rate hike path, concerns about a global economic slowdown, and of course the US-China trade war. We spoke with eminent economist William Bowter of Citigroup on what he made of the global setup and what can the Fed Reserve do amidst criticism from President Donald Trump. Listen in.
We have the trade wars, and on top of that we have the economic uncertainty created by the temporary suspension of part of the government in the US. Plus uncertainty in Europe. No. There's no doubt that this will affect capital expenditure worldwide, and this will affect property values, and this will affect asset market valuations. So I don't think we've seen the worst of the stock markets yet. Global slowdown is likely to occur during a period of still rising US policy rates and still quite high US longer-term yields, and I don't see any immediate weakening of the US dollar. The Fed can, for domestic dual mandate reasons, can continue to hike slowly and gradually, but continue to hike during 2019. I think we will, for the time being, continue to contract the balance sheet in this very gradual and measured way of 60 billion a month. The Fed will not change its course of action there unless there is visible evidence of faster than expected weakening of economic activity in the US. The President can fire the chair of the Fed only, as it's called, for cause. And cause is generally interpreted, although we have no precedent for this, as not excluding simply disagreements about policy. I don't think that Trump is going to go there, although you can never be completely sure. His propensity to do unexpected and rather over-the-top things is not to be underestimated. But I think that Powell's position looks safe to me. We really don't know what's going on. Yes, we had another, 4-hour or whatever telephone conversation between Xi Jinping and Donald Trump, but the meaning of that in terms of concrete progress in the trade negotiations is, I think, very unclear. And remember, these aren't pure trade negotiations. these aren't even trade plus tech plus intellectual property right negotiations. This is the new Cold War. The global economy will slow down, driven by China and the US.
All right, so those were the very important opinions really coming in, and some of the macro data which is going to define 2019 in trading sense as well. Let's now focus on one particular sector. It is that time of the month, remember, when the auto companies also release their monthly sales numbers, and Maruti is out, and it does not look like an impressive set. In fact, Sonia will take us through the details of the numbers and what the street is also expecting from the other companies. So Sonia, clearly autos have not really shown that kind of buoyancy in the last year. With the numbers coming in now, and what is the future trend looking like for the year as well?
Well, the initial signs are that things are a bit weak. So Maruti is the only big company that has released their numbers today. Generally on the 1st of Jan, you know, most of these companies don't release numbers because the offices are shut, but Maruti has. The numbers are looking weak. So there's a big hit that Maruti has taken in exports. It's almost a 37% slide that we've seen in exports, and that has dragged their overall numbers down by 1.3% versus expectations of a 4% rise. Now, if you look at the domestic sales, the growth is also hardly anything, just 1.8% is what we've seen. And if you break it up, the mini car segment, which includes the Alto, the Wagoner, etc., is down by 14%. Now, that could also be a conscious strategy of the company to sell more premium cars from their Nexa showroom. Nevertheless, even their compact car segment has seen a fall this time around to the tune of about 3.8%. If you look at the trend, it will come up for you, the graph that is. This is the lowest sales that we've seen at least in the last 15 months, 1.28 lakhs. Same time last year was just a tad bit higher at 1.30 lakhs. So December has been pretty weak for Maruti. But if you look at the expectation for some of the other companies, you know, inventory levels have been very high at almost 5 to 6 weeks across segments. So, you know, the discounting levels have also increased because pressure has gone up to clear that excess inventory, and that will really impact the companies, their margins, etc. Just to tell you, the pocket where people are expecting the deepest gashes is the commercial vehicle space. So overall, the industry is likely to decline by almost 17%, and within that, Ashok Leyland Nomura expects a 14.5% decline, while for the two-wheeler space, it's hardly a low single-digit growth that the street is expecting this time around.
All right. So the picture going forward is also looking grim at this point, given the indications that we are getting. But another important fact to also remember would be the crude oil prices, and they have been on the lower side, and that has a direct correlation to the aviation sector as well. In fact, the news is that we have seen a second consecutive double-digit cut in the ATF prices, which has a positive impact on the aviation sector. Sonia, tell us more about this.
Well, yes, that's the reason you're seeing a lot of the stocks, the aviation stocks up in trade. Now, as Nisha said, it's the second consecutive cut in ATF prices, and it's a double-digit cut that we've seen for 2 straight months. So in the month of January, ATF prices were cut by almost 15%. In December, it was cut by 11% month on month. And before that, there was hardly a single-digit move both ways for the last at least about 8 or 10 months. Now, ATF prices, as we know, account for 40% of the operating costs for aviation companies. And in the first half of the year, things were very bleak for the sector as a whole. The 3 listed airlines had a combined loss of almost 3,700 crores in the first half of the year. That's a loss of 20 crores per day. So the second consecutive cut in ATF prices will definitely boost the earnings for the aviation companies. That's the reason they're up and about today. Hi guys, welcome back. You're watching Business Lunch on CNBC TV 18. Once again, let me take this opportunity to wish all our viewers a very, very happy new year and a prosperous 2019. The markets have not gotten off to a great start. In fact, right now, although the volumes are low, the price action is a bit tepid. So the Nifty is now down about 35 odd points, down 0.3%. But you know, let's not put too much stock into the moves of today. Most of the market is off. Many global markets are not trading as well. So the real trends will emerge only after the 5th of January. But let's get you some views now. It's the first day of 2019, and market experts believe that the market will be volatile at least up until the elections, and then the second half will be better. Hear out what Samir Arora of Helios Capital had to say on the outlook for the year.
In 2019, I think it can't be a runaway year, I think, initially. but it's going to be a positively trending year, and then we see what happens in May. But it won't be a year where you are, you have to be bearish from day one. We are going in bullish, but we know that you can't have a runaway rally, I think, till these things get sorted out in terms of election outcomes and all. And after that, you could actually have a very good year if the rest of the world doesn't fall apart. Currency stops depreciating is such a big deal for foreign investors. And now it looks at plus minus, even if it goes back a little bit, but broadly it is stabilized. And that itself takes away many of the hesitation that foreign investors may have. In terms of fundamentals, clearly all these things add up: oil down and currency stable, and GST and all those things having taken more time. The only thing is that still there is an event, and that event is associated with very high volatility in the past, and even now could be. And second is anything that the government may do which may be viewed by the market as being overly friendly to, which it should be sometimes, to rural or to farmers, or something which looks a bit affecting fiscal deficit, things like that. Some greenfield here or there, or brownfield with some consumer type guys expanding capacity here or there, that can always happen. But I don't think big picture, big capex can happen right now.
All right, from Dalal Street, let's shift focus to Deal Street then. And the much anticipated future retail Amazon deal has hit a roadblock owing to the recent changes in the FDI policy for e-commerce in India. Now, we learned from sources that the deal is all set to be reworked, and CNBC TV 18's Priya Sheth is right here with all those important details. So, Priya, how big is the delay, and is it going to really lead to a very different structure altogether?
Well, at this point, what we know is that the future retail Amazon deal seems to have hit a roadblock owing to the recent changes in the FDI policy on e-commerce. Now, the FDI policy on e-commerce states that an entity having an equity investment by an e-commerce marketplace cannot sell products on the platform that's run by the e-commerce marketplace. So this means it's going to make it very difficult for Amazon to sell future retail products on its website. And this means that the deal, we understand, is unlikely to go through in its current form. So therefore, at this point in time, we understand the contours of the deal is still being reworked. And what we understand is that Amazon is making a representation to the government with regards to seeking clarity on what kind of investment structure will work as far as this deal is concerned. They're also seeking clarity on the applicability of new norms on investments through investment arms. So that's another space that they need clarity on. Legal options are also being sought on what kind of potential deal structure could go through in the current framework. So any sort of clarity can be expected only by the second week of January, when both the teams perhaps may meet and sit down and decide on what kind of way ahead it has as far as the deal is concerned. But it's important to note that Amazon has been in talks to buy over 9.5% stake in future retail, with an option to hike stake at a later date. But it remains to be seen whether or not the deal will happen, and if it happens, in what structure it will happen. We did reach out to the companies. Future Retail did not respond to our query, while Amazon said that they do not comment on speculations of what they may or may not do.
Okay, well, thanks, Priya, for that. On that note, let's hear out what Kishore Biyani, the CEO of Future Group, had to say when we spoke with him post the changes in the FDI policy on e-commerce.
Being in the market and being one of the leading players, we constantly are in discussion with every other player in terms of what can we do together. So I think within the contours of any policy, it continues, the discussion continues. So I don't know about a particular transaction or a particular thing which I can comment upon, but I believe the policy was already existing B2B. So there is nothing which has changed for us. Any transaction which we do will be at a group level in terms of what synergies we can build, because we have a supply chain business, we have a FMCG business, we have a fashion business. So we bring in the strength of the entire country's distribution, and we operate in more than 355 cities and towns. So what we bring in our strength has to be complemented with other people's strength, which can create something better.
All right, let's take it straight to another CNBC TV 18 exclusive, and the Minister of State for Agriculture, Gajendra Singh Shekhawat, says that the government is really working towards income security of farmers. Here's an excerpt of that exclusive conversation with my colleague Parikshit Luthra.
मैं ऐसा नहीं कहूँगा कि कंसिडर किया जा रहा है और ये भी नहीं कहूँगा कि कंसिडर नहीं किया जा रहा है। देखिए, सरकार में विभिन्न विषयों पर लगातार विचार होता रहता है और जब जिस समय उपयुक्त हो, उपयुक्त समय पे कोई ना कोई निर्णय होता है। रायतू बंधु की चर्चा बहुत सारी है। दूसरी तरफ हरियाणा की सरकार ने, भारतीय जनता पार्टी की सरकार ने इनकम सिक्योरिटी के लिए जो प्राइस डेफिशिएंसी जिस तरह से कोर्स ग्रेन में दिया, वो अपने आप में बहुत चर्चा का विषय है। मध्य प्रदेश ने जो पीडीएस स्कीम लागू की थी, वो अपने अपने एक चर्चा का विषय थी। विभिन्न सरकारें अपने अपने क्षेत्र और अपने अपने उपयोगिताओं के हिसाब से जिस तरह के निर्णय लेती है, वो निर्णय यूनिवर्सली पूरे देश में किस तरह से अप्लाई किए जा सकते हैं, सरकार निश्चित रूप से लगातार उस पर चिंतन मनन करती है। इस विषय में भी विचार विमर्श हो रहा है कि ये या इससे बेहतर और अधिक हम क्या कर सकते हैं, किसान के जीवन में जो उसकी इनकम सिक्योरिटी के दृष्टिकोण से क्या किया जा सकता है। इन सब विषयों पर निरंतर विचार होता रहता है। प्रधानमंत्री फसल बीमा योजना निश्चित रूप से माननीय मोदी जी की सरकार की एक फ्लैगशिप योजना थी और कृषि के क्षेत्र में इस योजना ने निश्चित रूप से बहुत अच्छे परिणाम दिए हैं। आज देश भर के किसानों को इस बात का, मैं नहीं कहता कि 100% जो है संतुष्टि का लेवल होगा, सेटिस्फैक्शन लेवल होगा, लेकिन देश के किसानों में निश्चित रूप से एक ऐसी भावना उनके मन में आई है कि कहीं न कहीं हमारा फसल चक्र जो है सुरक्षित है, सरकार हमारी चिंता कर रही है कि फसल बीमा और अधिक प्रभावी हो। इसके लिए हम निरंतर विचार करते हुए इसको और अधिक प्रभावी बनाने के लिए काम कर रहे हैं।
Okay, well, that's the word coming in from the Minister of State Agriculture. But moving on, it's a huge loss for the film fraternity. Veteran actor, writer Kadir Khan passed away after a prolonged illness at the age of 81 on the 31st of December. Kadir Khan was admitted to a hospital in Canada, and his son confirmed that his last rites will be conducted in the country. As per reports, he was suffering from a degenerative disease that causes a loss of balance, difficulty in walking, and dementia. Kadir Khan is known for his impeccable comic timing, has acted in over 300 films, apart from writing dialogues for 250 movies.
Now, on Diwali of 2018, remember, the Prime Minister announced a portal that would allow the struggling medium, small and micro enterprises to get loans approved in less than an hour. But after questions being raised over the ownership of that portal and who it was ultimately benefiting, new data has called the effectiveness of the scheme into question. CNBC TV 18's Kevin Lee and Ritu Singh report on this.
59-मिनट लोन पोर्टल का देशव्यापी लॉन्च करना, यानी अब जितनी देर में आप सुबह घर से ऑफिस पहुंचते हैं या शाम को जितने समय आप अपना वही खाता मिलाने में लगाते हैं, उतनी ही देर में आपको 1 करोड़ रुपए तक के ऋण को सैद्धांतिक स्वीकृति मिल जाया करेगी.
The Prime Minister's announcement of a dedicated fast-track portal for MSME loans was welcomed by a sector struggling to find formal sources of finance, but has had a turbulent journey from the get-go. First, questions were raised over the ownership of the one-year-old company that operates the portal, which charges a 1,000 rupee application fee, regardless of whether or not loans are sanctioned. Now, data released shows that just 1/3 of loans approved by the portal have been sanctioned by banks, and there's no mention of how much money has actually been disbursed. The portal has received 1.3 lakh loan applications, of which in-principle approval was given to 1.12 lakh applicants seeking a total of 37,412 crore rupees. Of these, banks have sanctioned 40,669 loans worth 14,000 crore rupees. What's more, despite collateral-free loans being promised, MSME entrepreneurs we spoke to said that banks were changing the terms of the loans before sanctioning them.
Suddenly one day, we got an email notification that our loan has been rejected, primarily on the fact that they were asking for a collateral which was twice the amount of the loan which had been sanctioned.
The loan portal's Twitter page is full of such complaints. It doesn't help that the portal has netted over 13 crore rupees through application fees in just under 2 months.
Banks also told us that 1 month was too short a time period to judge the success of such a scheme, adding that this was still better than the previous system, which did not have a fast-track portal for MSME loans. However, MSME entrepreneurs we spoke to remained less than happy with the overall experience. With Ritu Singh in Mumbai, Kevin Lee.
Okay, well, let's leave you with some market opinion now from Nirmal Jain of IIFL. He talks about his outlook on NBFCs and the realty sector ahead of the general elections.
NBFCs, they have been valuations have corrected because of this crisis that we saw. But you see, no NBFC has defaulted. No NBFC really has gone down under. They are doing a lot of, their relative share is much higher in the SME sector and consumer credit, and that's very important for economic growth. If you look at even tier 2 cities like Bangalore, Pune, then real estate is selling well and is not really, of course, the sales may be a little slower than what most of the developers would like to. But, and you go down further to tier 3, tier 4 cities where affordable housing or the Prime Minister's affordable housing scheme and all those things are working, there you really don't see this kind of stress. There are pockets in Mumbai where there are very high prices, very high concentration, and very poor infrastructure in terms of roads, sewage, or water, and or parking, or everything else. That is where a lot of stress is there. And maybe I won't rule out a few accidents like Amrapali, but I don't see that the accidents will be such that there's a systemic risk.